Hey guys, my name is Mike Boyd, this is the Money Flare, and today I'm going to be talking about something that doesn't get covered much in the YouTube finance space, and that is the current energy crisis that we find ourselves in. Many of you might have already noticed that gas prices at the pump have been rising lately, and in the UK, natural gas prices are putting things like lumber and Dogecoin to shame. Same thing for coal prices. Both have shot up significantly over the past month or two. Now, this topic may not sound like the most interesting topic to some of you. I've often seen people online describe oil and gas companies as boomer investments, right? They're not the most interesting, innovative growth stock. They don't really get much love online. But I think that the energy space as a whole is, in my opinion, a fantastic investment opportunity right now. And ignoring it would be a huge mistake, as I believe we've just begun what could be a long-term cyclical energy crisis that can bring significant rewards if you can invest wisely. And so I think you really need to understand what's going on here and how you could potentially profit from it. So first I want to start by giving some context into how we got ourselves into our current situation. And it all starts with climate change. Now, I probably don't need to tell you that climate change has been a hot topic for many years now. And governments all around the world have set policies and targets to reduce our reliance on oil and coal and other polluting energy sources in favor of green energy like solar and wind. Same for electric vehicles. It's part of the reason why there is so much hype around EVs and battery technology and companies like Tesla and NIO. Now, don't get me wrong, humanity needs to come up with solutions to the problem of climate change, and we need to develop and build out the green energy infrastructure that can sustain our current and future energy demands. But that's the biggest challenge right now. How do we make a smooth energy transition? Like it or not, oil and gas and coal play a huge part in our current global economy and energy supply. Oil, for example, is in so many products, not just in the gasoline for our cars and the jet fuel for our planes and energy to power our cities, but more than 50% of oil production is used to make a variety of products, from medications that are derived from benzene, a petroleum product, to cosmetics, to plastics with petrochemicals. So we can't really avoid the fact that oil is currently the lifeblood of the global economy, and it will take time to transition away from our current energy infrastructure. You can't just turn all that stuff off and expect that wind and solar and other renewables will just take over from there. But that's exactly what governments around the world have done, and it has so far led to disastrous consequences. Instead of a smooth transition, they essentially just shut the switch off. So since 2014, investment into oil and gas companies has been basically non-existent, and the current US oil rig count, for example, is the lowest it's been in a decade. Same thing for nuclear and thermal coal and anything not related to green energy. All of the investment has basically just dried up in the whole space. Pension funds and other large institutional investors are constantly virtue signaling and announcing that they are divesting away from oil and gas. So rather than creating a demand-focused climate policy that would see the price of oil come down as better efficiency and renewable sources reduce our demand for oil and coal and other dirty energy sources, we've basically decided to reduce the supply. So starve this space of any investment and just throw money at solar and wind instead. But if the structure of our current heating systems and power plants need oil and gas, then what have we really accomplished? If we aren't changing the demand side, then we haven't really tackled the true root of the problem, and all we've done is just make things worse by reducing the supply. The transition to green energy will take time and needs to be a smart one, not a rushed mess. And so that's where we find ourselves today. Globally, we are short energy, and the COVID crisis made things even worse as energy producers had to shut down, further limiting the supply. We currently don't have enough supply to meet our current and future energy needs, especially if we aim to reach our green energy goals by 2050. And as I mentioned before, the current crisis is having an explosive impact on the price of oil, and especially natural gas and thermal coal prices, because if supply is constrained while demand increases, then prices can only go up. China in particular is going through its own major energy crisis. More than half of China's mainland provinces are cutting back on electricity usage due to shortages. China's crisis is specifically related to coal. It's still a key source of electric power globally, and with the recovery in global energy demand following COVID, Chinese coal demand has also increased. People need energy, right? That's the one need that's very inelastic and pretty constant. But once again, the supply of coal is very low. Coal mines have shut down during COVID, and over the years, very few new coal mines have come on board due to the negative stigma and the Chinese government's CO2 emissions targets. And no, electric vehicles won't make us less reliant on oil as much as Kathy Woods would like you to believe it'll happen tomorrow. For sure, one day in the future, but in the short to medium term, it's not having as much of an impact as some people believe. Back in July of last year, she was calling for $12 oil, and since then the price of oil has been on a steady march higher to $82, up 116% since her disastrous call, outperforming both the S&P 500 and Kathy's own ARK fund. I don't mean to pick on Kathy Woods, but these type of uninformed opinions is part of the reason why we find ourselves in the current crisis. Climate-related predictions have often been wrong, and they've been wrong for decades, and they've created a false sense of urgency among the public and government to make changes right away. And the reality is that climate change is real, but our models are often inaccurate, and we should take every doomsday prediction with a grain of salt. These skyrocketing energy prices are having a negative impact on the economy as a whole. There's a real concern over the ability of countries to adequately heat homes as winter months approach. Key commodity producers are halting production due to high energy prices. The Dutch aluminum producer Aldel shut down production because of high energy costs, and same thing for one of the world's largest zinc producers, who's shutting down production by 50%. And unfortunately, these surging prices hurt the poor and middle class the most because, as I said before, oil is the lifeblood of our economy. So rising oil prices means rising food prices, and gas and food account for the majority of the low to middle class monthly expenses. Not only that, rising energy costs puts into question the global economic recovery that we've had post-COVID. It definitely doesn't help the already very strained supply chains, and energy crises in the past have often led to significant credit events where companies go out of business. So once a crisis starts, it becomes a death spiral where energy prices are too high for consumers, forcing them to reduce their consumption, but too low for energy producers. And these crises have often led to bankruptcies and even social unrest. So will we see that this time? I definitely hope not, but it's definitely a possibility. So that's where we find ourselves today. We are in the middle of a global energy crisis due to a lack of investment in oil and gas and an abrupt transition to renewable sources which don't adequately meet our energy needs. The transition has not been very graceful, and it's led to energy supply shortages and skyrocketing prices that are hurting the poor and middle class the most and could bring down the economic recovery. If the root of the problem isn't solved, then this crisis could be a long-term cyclical crisis that happens every year as the winter months approach. The one silver lining is that this situation presents us with an unbelievable investment opportunity, in my opinion. While the cost to heat your home might be very pricey this winter, I'm hoping that you can offset that with gains made investing in this space. Oil and gas companies like Energy ETF XLE and coal companies like Peabody Energy have been absolutely fantastic investments this year. And I think they have further to run as this crisis continues, and especially if this winter is particularly cold. Same thing for natural gas. Natural gas producer Range Resources has been one of my best investments this year. But in my opinion, the greatest opportunity still lies in nuclear. I covered this in a previous video, so please watch that to get more details. But basically the situation is exactly the same as oil and gas. Nuclear energy has had a bad reputation ever since the Fukushima disaster, and there's been an extreme lack of investment in the industry ever since. Uranium, which is the element that makes a nuclear reactor run, is in such low supply now as uranium miners had to essentially shut down. But for some reason, we seem to forget that nuclear energy is one of the cleanest sources of energy, and countries will soon come to realize that relying on nuclear is the only way that they're going to be able to meet their green energy goals. There's just no way around it. The math doesn't make sense without nuclear. And the current energy crisis is finally making a lot of countries change their mind. The UK, Netherlands, Germany, Finland, and Japan have all recently announced their plan to be much more nuclear friendly. And as you guessed it, with a surge in demand and very low supply, the price of uranium has the potential to shoot through the roof, and uranium miners will be printing money. Miners like Cameco and the uranium miner ETF URNM are some of the ways that I'm riding this nuclear wave. They've already gone up a lot already, so I hope any of you who may have seen my previous video have joined in on the gains since then. And unfortunately, I was too slow to release this video because the most recent surge has been pretty intense. But like with oil and natural gas, I think that this potentially is just the beginning of what could be a pretty crazy bull market in energy and uranium. So that's everything you should know about the energy crisis and how you should potentially be investing to take advantage of what may come. It's hard to see people struggle with rising costs of living and the inflation that we've seen over the past year. And unfortunately, many of the policymakers who are directly to blame for this crisis aren't seeing the effects as much as the voters who elected them into office. Most likely they have a large retirement account with assets that have gone up in value, so it's not really a big deal to them. But I'm hoping that this space is a way that you and I can offset some of the increasing costs. So that's where I'm definitely putting my money. I'm investing in an area that is hated by most, but which has a very good risk-reward potential in my opinion, especially uranium. A lot of these stocks have already gone up significantly, so it might be best to wait for dips before buying, and I'll definitely be buying every single dip going forward. Once again, please remember that this is not financial advice. This is just my opinion, and I could very well be wrong. Maybe the crisis is nearing its end and the gains have already been made. But I hope I've been able to make my case pretty clear as to why I don't think that's going to happen, and why I believe that investing in energy, natural gas, and uranium is one of the best things you can do for your portfolio right now. So that's it for me. Thank you guys as always for watching. Please be sure to like and subscribe. Stay safe in these crazy markets, and I'll see you at the next video. Take care.